Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Sheldon McIntyre on the line. He is the founder of 360 Virtual Advisor. Sheldon, how you handling all this volatility?
I'm doing okay, thanks. Riding it as usual. When you've been in the market for a few years, these things don't really rattle you too much.
Right. Well, there's some pretty good volatility here, and I know you kind of like to kind of like stick to your rules and your patterns, and so what's going on here? Are there any beaten up sectors? Maybe Dennis and I were just talking about the semiconductors, and I know you've been in the chat asking a few of our guests about it. Have you been in there buying, selling, holding? What are you doing in the semiconductor space?
Avoiding, that's what I've been doing. No, it's one of the things I've been talking with my clients with pretty much since about March, April of this year was my concerns with the semiconductor space. I believe it was SanDisk back in March that lowered its outlook for 2015, and that sent the sector down quite a bit, where you saw it bottom around 660, and then it kind of moved sideways, and you had that brief pop into new highs following a merger announcement. I forget which two companies came together. It was a fairly large merger announcement, and then it has been basically in a free fall since. Um, Yesterday's big time bearish outside day is a concern coming into today. We might be able to avoid following through, but if we can't close today above 660 in the semiconductor index, the SOX, I would say it leaves the index very vulnerable to a decline down to the 550 level, 560 level.
Whoa,
Which
Sheldon.
yeah,
550. Sheldon. You just didn't say 550, did you?
I did, Joel. That is a major, major support level. That's sort of the breakout, secular breakout area that's puts together, I think, the 2004, 2006, and 7 highs. You may want to check those years. But yeah, there's a lot of gaps to be filled down to that level. And you'll note back last year in the third quarter, we had that big drop and we had a successful test of that level. So I would not be surprised if we see that again. If we can't stay above 660
Are you
on a
going to
week.
try? Would you try and short them?
Well, if we move higher today, which it looks like we will, I'm going to watch how it trades today. I do have the SOXS, which is I guess it's the ultra short semiconductor ETF, and I am watching that. I would get into that if I see the right kind of setup, but I wouldn't do it now.
SOXS, you said?
Yeah, yeah.
Huh. I'm not seeing that. Oh, so that's, oh, there
It's
it is.
SOX and an S.
Yeah,
Throw
yeah,
an S at
yeah, I
the
see
end
it.
there.
Yeah, wow. Bet you that thing moves a little bit, huh?
Yeah, it
All right.
does.
Yeah, it's been moving up
That's
nicely. Yeah. Whew.
It's interesting that, because, we had it kind of comes together where we've had Apple struggling for several months now, and we just had the Nasdaq Composite Index hit all time or touch the all time high at 5132. So with the semis at the situation they are, and Apple struggling, you have to think that getting past that 50 or 100 5132 level in the Nasdaq is going to be very difficult, at least in the short term.
Okay, so what about the overall market here? It's closed on the lows yesterday. We're right back up at yesterday's high. What did they have any longs overnight you're thinking of getting rid of? What's your take on this? Just right back where we were yesterday morning.
Well, we'll have to see how we close today. I think one of your previous guests talked about that. We've sort of seen this already. I think today, though, we won't fade as much. I think that we probably will hold at least some of the gains, half or more of today's morning gap on the optimism over Greece. Personally, I think Greece has been a non-event. I think the market itself has been weak and moving sideways more because of the internal situation and the decline in secondary momentum from a macro level, and has very little to do with what's going on in Greece. If you take a look at the 10-year bond yields in most of the European countries that got hit pretty hard back in 2011, they have popped a little bit, but relative to where they were during 2011, when the European situation really came on the scene,
Mm-hmm.
they're nowhere near those levels. So to me, that's a very good sign that really Greece is quarantined, that this is a country-specific situation, that the euro, people want to talk about it being vulnerable. It's not vulnerable to disappearing. It's maybe vulnerable to further weakness, but that's about it. But in terms of the U.S. market, this is an issue from a macro level. We're in, I guess it would be our fourth bull market extension now since 1949, and it's getting pretty long in the tooth. And the previous ones we've seen, one came in going into the 2007 high, and the second one came in going into the 1987, prior to the 1987 crash. So we do have to be worried about that. You have to take a look at the percentage of stocks trading above the 200-day on an NYC. It's at a very low level considering that we're just a couple percent away. It also looks very similar to what we saw in 2007, where we saw the pop into new bull market high, but there was less than 50% of the stocks trading above their 200 days. So I kind of always relate that to when you're moving. I'm sure when you went to university or even after, we've climbed the stairs carrying these couches, right? And guys get tired, they party too much the night before, and slowly one guy falls off, and then you're down to just a couple of guys trying to carry the rally or carry the sofa up. And what happens? You drop the sofa, and that's sort of where we're at, I think, with the market right now.
That's a good analogy there. Interest rates, Fed, is September off the table, December 2016, 17, 18. What do you think? What's your outlook on rates?
Well, I have to admit when I was wrong. You know that I came into this year looking for at least a notional hike in the rates by April, May, June, and of course we didn't get that. My timing model was off on that. It looks like we're pushed out to December, and it wouldn't surprise me. Now we go into 2016. I think that we have to. I think for the first time, and I really think that, people talk about Greece, but I really think what's taking place in China is far more significant for the macro situation and the financial markets. They really got caught between a rock and a hard place here with this aggressive policy to try and prop up the financial markets and help this, recover the housing market there, and it's left the country very vulnerable now. And now we're seeing the piecemeal approach to trying to rectify the situation, and we know from previous crises that piecemeal approaches to developing financial stress usually don't work. It might seem like it in the short term, but in an intermediate term, it never, well, not never, but usually it doesn't work. So I really think that the Fed will be pushed out into 2016. I think the Chinese situation has not been completely unveiled yet, and that probably will throw a curveball to the
Yeah,
Fed.
in
And I think
economic.
personally, go ahead.
No, I just say the economic numbers aren't that we're getting are not exactly rearing inflation or overheating economy as well.
No, no, you're right. I mean, the U.S. economy is just like putting on cruise control. Really, I look at the chemical activity barometer. For me, is a best way of looking at it, and the U.S. economy, and it has picked up a little bit in the last month, but it's not seeing an acceleration in U.S. growth. It's sort of like constant from where we're at now. So, like I said, I thought coming to this year would see some kind of nominal hike, like a test run,
Mm-hmm.
and probably that's what is going to happen at the start. We're going to get a test run at 25 basis, and then we'll see how the market accepts that. But growth is not there yet. Inflation is not there yet, and I think the China situation has not unveiled itself completely either.
We've been on the line with Sheldon McIntyre. He's the founder of 360 Virtual Advisor. He comes on the show once a month or so to give us his outlook on the markets from Santiago, Chile. Sheldon, thanks for coming on. Have a great trading day and a great weekend. We'll speak to you again soon.
I appreciate it, Joel. Take care.